All right, welcome everybody to another episode of Proof of Vision. Today we had on Jorge from maxAPY. He is the founder and CEO, and it was a really good discussion. We talked about kind of automation and DeFi from a yield aggregation level and a yield optimization level. Thought it was really interesting to hear his take on some of the I think the incumbent curators in the space, such as Gauntlet, MEV Capital, RE7, Chaos Labs, right? And whether or not what maxAPY is building is really disruptive for them, or is it more synergistic? And then we get into the maxAPY token down the road, and kind of Jorge's thoughts on the yield markets out there and how they curate risk. So it was really interesting. Hope you guys enjoy it. If you did, obviously like and subscribe, and we will see you next time on the next episode. All right. Cheers. All right. Welcome, everybody, to another episode of Proof of Vision. We're really, really excited today to have Jorge, the founder and CEO of maxAPY. Welcome, sir. How are we doing?
Thank you so much. I'm doing well. How about you?
Doing well. Can't complain. Another day, another interesting market in crypto. So it's a daily thing, I guess.
Definitely.
Especially when you're doing things like what you guys are doing. So yeah, I guess without further ado, I like to talk about a little bit about your background, how you got into crypto, and maybe talk about like the road into founding maxAPY and the problem that you guys are trying to solve here.
Yeah. So, again, thanks for having me here. In terms of how I got into crypto, was already relatively long ago. It was 2012 when it was just Bitcoin, and at the time we were running my first startup, and someone in the team had read about Bitcoin, and we all kind of started reading about it, and it was kind of like a wow moment of like, man, this is amazing. This could change the world, but it's not going to change the world, because at that time we thought, like, what are the chances? Like, it's a bunch of we're a bunch of geeks talking about this on like forums and stuff. Like, if you want it to be a currency, you need like my grandmother to adopt it, right? So like, that's never going to happen. And then governments and all that stuff. And so I bought some, but I didn't really think of like it as an investment. It was more like, let's support it kind of thing, right? And I still remember buying a bagel at a shop in Madrid that was accepting Bitcoin, and being like, yeah, it's clunky, but it works. I just paid, and that's great. And so it was a great experience, and I've been on and off investing in crypto ever since then. Professionally, I've never dedicated myself to crypto until 2021, which is when we started both Veris Labs, which is the venture builder where we've done maxAPY, as well as Turing Capital, which is a fund management firm in Luxembourg that runs two crypto hedge funds. But even though I wasn't professionally in it, I've been like investing in like all the things that were kind of like trendy, and like doing a lot of DeFi, and that was a lot of fun. And so, and that's kind of also what led to creating maxAPY, right? Because at the end of the day, I was seeing that whenever I spend time in DeFi, I would make money. Sometimes you lose, but on average, I would make money. So there's, in other words, good opportunities to make money, especially when you're looking at generating yield. And the thing, though, is that it does take a lot of time to do it well. Like, if you want to do it well, it's full time, right? And I don't have full time. And so I said, look, this is full time, but it's really, what I'm doing is kind of like stupid. It's not really, you don't need like, it's just like executing kind of, right? It's like signing transactions, clicking and bridging, and like all of these horrible UX things in crypto that still take ages to do. And it's like 80% of the time is just that. It's not really brains. There's like maybe 10% of the time that's brains. So that's when I started thinking, like, why don't we just create the brains, with the technology that we have today to make those decisions? Because it wasn't also like rocket science, right? What we were, when you were selecting strategies, and then everything else can be fully automated, right? And that's how we created maxAPY. So maxAPY basically does what I used to do in my free time, but on autopilot. You just deposit your ETH or your USD into the ETH or USD vault. Soon we'll have a Bitcoin vault. And it just scouts all of DeFi across 9 chains and finds the best yield for each of those assets. If it's stable coins, for example, it will look across not just USDC, but USDT, DAI, like all sorts of assets that are pegged to the dollar, and that are secure. Like we do vet them, and just deposit into the strategy that generates the best possible yield at any given time. If that changes 10 blocks later, it moves on to the next thing. If the gas costs, bridging costs, etc., are worth the difference, of course, it takes all of that into account, and the swapping costs and slippage and all that stuff, right? So yeah, it's basically DeFi on autopilot, so that everyone can basically access the best DeFi yields, regardless of if you can be full time and if you are proficient in DeFi or just a beginner to it.
Yeah, no, it's very interesting. Especially for me, I'm like a yield maxi. And again, you're spot on when you say like the amount of time that it takes. It can be crazy, right? Just signing transactions, just doing kind of like these meticulous actions, right? That aren't really like, they're not value additive. They're just time wasters. So
And
I'm a big
and you
believer in the
fuck up,
automation part of it.
and you fuck up every once in a while as well.
Yeah, yeah, right, yeah.
I mean, I don't know, but like I fucked up a few times, right? So, it's human error, and especially when you're doing these things that are like kind of like very mechanical and repetitive, right? Where you get confident, and then suddenly you've sent tokens to the address that's not the right one, or you've put in the comma in the place that it's not, and now suddenly you've moved the price of the asset you're buying against you, and you've lost some money, and like all that stuff that can happen, right?
Yep. Yeah. So the automation is a big thing that I think I've seen, coming to DeFi. Obviously, I think everybody realizes that the UX is terrible. So it's interesting to see a lot of these aggregation plays or like these abstraction plays that are coming to DeFi, and it's kind of been very, very prevalent in the last year or so. But one thing I think about when I see something like maxAPY, when I see things like iPoor, like what iPoor is doing with their Fusion vaults, it's a yield optimization play, with the automation built in. So it's kind of like these two worlds are conflicting, in my opinion, right? And you've got the right background because you come from a hedge fund as well, right? You manage 2 hedge funds with
Yep.
Turing. But okay, so like let's say that I am, I want somebody else to manage my money. It's an opportunity between like automation. Do I send it to something like maxAPY or iPoor, or you see like what these risk curators have done so far in DeFi. You see the gauntlets of the world, the chaos labs of the world, the RE7s, the MEV capitals. What they're doing on Morpho, what they're doing on some of these other platforms where they can like curate these strategies. And I just want to get your opinion, I guess, like because I view this as like, are those guys going to go extinct because of the automation, right? If you have a risk curator that's a bot, or it's an AI or whatever you want to call it, that's going to take market share away from these risk curators, in my opinion. But
Yeah.
I just want to kind of get your thoughts on that.
I think it's yes and no. So I think it's two different value props, right? Our value prop is in the automation, right? And it's in like really giving you access in one click to the whole of DeFi. Their value prop, at least in my mind, is the risk analysis. And you want to have that separate to a good extent, because a manager is always going to be like a manager. There's always a danger that a manager, by a manager I mean an asset manager, and that can be a bot, right? Does need to be a person, but its incentive is to make a home run, right? Because there is not much downside to the manager, especially a bot, right? Because a person, like, I have capital deposited in maxAPY, so if it goes south, I lose capital. I'm the largest LP in Turing Capital, so if we fuck up, I'm the one that loses more money than anyone else. So there I'm kind of like aligned. A bot is not aligned, cannot be aligned, because a bot, at least, I mean, maybe, these things will kind of like change, but at least the way bots are programmed right now, they don't give value to ownership of assets, right? In that sense, or it doesn't hurt them so much, right? So you want to have the risk analysis, done by a separate entity, if you can. And we will at some point. I cannot say exactly when, but it's not going to be like super far away. Like the designs are done, like everything. It's now just a matter of finishing the kind of like the more back end stuff. We will launch risk tiered vaults, right? So there will be kind of like the max vault, which are the ones that, it's just about the maximum possible APY inside of like working with, well known and vetted protocols, but it's just about maximum yield. And then you will have your different risk tiered vaults, and those, just like Moody's, you will have your triple A's and your double A's and your A minus and your whatnot, right? And the more TVL we have, the more granular we'll do it. And in order to determine what risk level a counterparty is, or a protocol and an asset, you need, one or even more than one of these risk assessment companies.
This episode is brought to you by Pendle. Pendle is the market leader in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing asset in DeFi, while creating an avenue for users to express their views on future yield or earn a fixed rate with their assets. Learn more at pendle.finance.
Gotcha. No, it makes sense, especially on the integration side. I think the thing that I worry about is like from a fee perspective, so obviously, that there's going to be a charge from the protocol, right, for the the infrastructure. Then there's a charge from the risk curator for the the risk management. So it's going to be, obviously this has all got to play out like into the future, right? But it's going to be a matter of of fee performance. I think at the end of the day, it was performance and fees, right? So it's going to be very interesting to see how all that converges once everything is in place.
The way we look at that is, I think we've for our V1, we've established, I think, a very fair structure, and it's basically 2% management fee, 200% performance, but it's all inclusive of all underlying fees. Meaning, if 20% performance fee, let's say your assets are deposited during 3 days on I don't know, on a yearn vault that is charging 10% performance fee. So the 20% includes that 10% already, right? All the like costs of like oracles and all of that stuff will be deducted from the management fee. So it's basically, adding more things below it doesn't mean that the fees add up, right? It's always going to be kind of like 220, which is the standard in hedge funds. But normally in hedge funds, you then have the fund costs that go against the fund. Here, not yet, but we will reach a point where this is more efficient in terms of human capital than a fund. And we need a bit more TVL for that to be the case, though. And at that point, you will also have like all the costs that can be assigned to the management fee will be assigned to the management fee. And the idea is that the management fee nets out to zero to the protocol, right? And that the protocol really only makes money from the performance fee. And again, only from the performance that you reach by automating that rebalancing, not by the original yield, because that is done by the sub protocols, Yearn and Beefy and the convex curve, Uniswap, etc. Uniswap doesn't charge for the performance, but you know what I mean, right? You have Beefy that does a vault on Uniswap, and they charge you for that, so they should get the performance, and maxAPY really only gets the performance of the rebalancings.
Gotcha. No, it makes sense. Let's talk about how you mentioned a couple of the yield providers right now, Yearn, Beefy. I think Convex is in the mix. Let's talk about that for a second. Like, how are you guys? I guess how are you guys looking at like the onboarding of these yield opportunities and these yield sources? Because as you know, in DeFi, like things move very quick. It's hard, right? And I think that's where some of that time is spent, from a user perspective, is how do I assess this protocol from a risk level? It might be brand new, but it's like, it's going to the moon right now because everybody's using it. There's points, there's points, everywhere. How do you guys think about that from like a risk management standpoint right now for V1? Obviously, you don't have the curators in yet. But how are you guys thinking about that right now? Is that like an internal thing that you guys are deciding and kind of centralizing right now?
Right now, that's fully like on us, and we just vet it, right? And We have the system that notifies us whenever. So the good thing is like with ERC 4520 and 7540, the good thing is that any protocol that uses those vault standards, we can integrate like this. Like it takes, like in the day that they're launched, it's integrated. Before in our beta, it did take us like a week, and per strategy, not even per protocol, but per strategy or per vault. And that's like, and we would only have one concurrently being developed, right? So right now it's super fast, but we do need to vet it, and we vet it manually. And you don't only vet the protocol; it's actually more complex than that, because Yearn does not run on Yearn. Yearn runs on Curve, for example. So you need to vet Yearn, you need to vet Curve. And then Yearn, has a strategy that works with, I don't know, PYUSD, right? PayPal USD. So, I mean, that's an easy one to vet, but I don't know. Let's say MAI, right? So now you need to vet MAI as well, the protocol and the asset, which is a stable coin pegged to the dollar. But you need to now look at, it's not actually a physically one-to-one physically backed, so you need to look at all those things. And there's some part of the risk management that is automated, which is on the assets, basically checking on DPEGs and on volatility of their price to the base asset. But the part that is more on fundamentals, we do it manually.
No, it makes sense. Yeah, because
for now, right? The idea, obviously, we need to do things step by step. Of course, we cannot develop everything at once, but the idea is to have a DAO that does that, of course, and or even several DAOs that do that, and external parties, that do that on chain, and that could be a Gauntlet or a Chaos Labs, right? That could be one of these guys. But first, we need to develop the protocol, and then we need to move on to decentralizing it, right?
Yeah, no, it makes sense. I mean, there's a path to decentralization, and I'm always like, I believe in decentralization. I think it's useful, but I only think it's useful in like certain environments and scenarios. Like you can't decentralize everything, because then again, we complain about the UX in DeFi, right? Yeah. Part of the problem is like this balance between decentralization and UX, right?
In this case, there will always be some sort of centralization, because even if you have like 4 DAOs managing the risk, it's 4 DAOs managing the risks. It's not 100 million DAOs managing the risk. But what I mean more with that is, to us, what really matters is if the whole Veris Labs team is on a plane and the plane crashes, that the protocol can continue as if nothing would have happened, right? Because because it doesn't depend on us. That to us really, in this, I think, as you also point out, decentralization, the point up to which it's useful depends on the protocol in the case, right? And I think in this case, what it really depends on is we cannot steal your money, and if we die or something happens to us or we just burn out, the thing keeps working as intended.
Right. On this idea of risk still, right? Obviously, we had something happen recently that I think a lot of people got caught up in, right? Which was the usual money, like USD 0++ situation. And like, it was interesting to see like what the curators did in those situations, right? And how they reacted, how quickly they reacted, were they able to react? I'm just curious, like, how do you think? I don't think you guys had any exposure to that, or correct me if I'm wrong, but if you did, like I'm trying to predict, like, how would maxAPY like react to something like that? Does the bot have automation capability to like obviously detect the DPEG, right? But like what kind of risk mitigation would be there, right? Or would you guys have already caught that in the vetting process? Just want to get your thoughts on that.
Yeah. So I mean, the normal thing would be that we don't enter into assets that we don't consider safe, right? So the vetting process should solve that. But we can always make mistakes. There were so many people who gave value to UST, right? And people who are professional investors, right? So it can always happen, right? So the first security measure is vetting, but you should not rely just on that. Second security measure is automated, which is if we see that an asset starts to be more volatile than it usually was, we take positions out of that and we move into the next best yielding strategy with an asset that is not that asset. And then, of course, there's an emergency button, which right now, again, it's fully dependent on us. Like we can push it, and then everything goes to USDC on base. It moves even back from whatever chain it is to base. And and if we push it again, then it looks again at what's the next best possible strategy. But that in the future, of course, as well, we would like to make it dependent on not just one party, but several parties. But there you can also not go too big because then reaction times are slower, right? And you might end up in a more risky situation. So that's the things that, need to be very nuanced in terms of it not depending on us not dying, but then also not depending on 100 people getting together and making a decision, right?
Right. No, it makes sense. So let's talk about the meta aggregation narrative, right? You guys describe yourselves as this meta aggregator of yields. Like, what's the difference, right? What's the difference between like what you guys are doing and what Urine is doing, or like a Superform, for example, with their USDC vault? Explain that a little bit, because obviously I think you guys are more synergistic with those protocols than you are competitive. But like, maybe explain the strategy there and the overall vision.
So Urine is a bit different. Urine, I would say, is more different to us than Superform is in some ways. Urine is more of, here you have a bunch of strategies for, many strategies for one same asset, and it's more up to you to choose, right? Yes, they have one strategy per asset, or one for ETH and then one for USD that is kind of like diversified in the underlying strategies that exist there, but they're all like, they're all about like super safe yield. And many of the times they're actually below the risk-free rate of staking. So and it's not because they're poorly designed. It's because they exist from way before staking. So that was kind of the intention, right? But it's more of they have different strategies, and they're like, you can see it basically as each strategy is a fund, right? So to say, and we're a fund of funds, right? Same thing with Superform, right? Superform, basically they're a router that connects to strategies from others, to Yearn, to Convex. Well, I'm not sure if they're with Convex, but I don't know, Sommelier, a bunch of these. And so they're basically like a fund distributor, right? They're basically like I don't know. There's Clearstream, there's Eurostream, in here and over in Europe, all funds. Like there's many of these distributors that connect to the banks, so that you can call your bank and say, I want this fund, and you don't need to do the KYC and AML. You just invest, right? That would be kind of like a. And then they have launched their own fund of funds, which is their Super USD vault. And that is actually relatively similar to what we do at maxAPY in our USD vault. The only difference there, or one of the differences there, is that we are not limited only to strategies that are integrated into Superform. So we have more strategies to choose from, and ours is cross-chain, right? So if the main vault lives on Base, or is going to live on Base now when we release the V1, and you deposit on Base. But the next moment, if the best strategy is not on Base and it's on Mainnet or Avalanche or BNB chain or Optimism or Arbitrum or whichever of the 9 chains we support, Blast, etc., then it moves there, right? So, but at the end of the day, it's just two fund of funds competing for similar things. There, I would say we're relatively similar.
And you mentioned like the cross-chain component of it. So let's dig into that a little bit. What are you using under the hood? How is this working? Is this a layer 0 Axelar? Or have you guys developed your own? Like what are you guys
not our own, but all of the above except for that. So we use them. We use also cross-chain liquidity providers like LiFi. We use it's many different providers we use for different reasons. A is that we always want to use whichever has the best outcome for us, right? And then B, you need a backup, right? If one fails, you need to be able to use another one, or you need several backups. So we're about, we like to integrate as many as we can, and we will keep on integrating more if if there's more that makes sense. which is kind of like what we do with everything. We also integrate different AMM aggregators in order to make swaps in the best way possible. So anything that can improve the yield and the performance, that's something that we'll do, right? And many times it's about optimizing those small things.
Yeah, that's interesting. And you're not the first person I've heard say this either, and I do think it's the right design choice. Where like I've seen protocols that are like exclusive, right? It's built on layer zero, right? But if layer zero has a problem, then what do? You're kind of cooked at that point, right? So I've heard of a lot of protocols I've talked to recently, actually, the same thoughts, right? Where it's more of like the same way you're aggregating yields, you're aggregating like your bridge providers and your liquidity providers on the cross chain side of things, and I think that's the right move. So the algorithm then, right, it's scraping yields, across all these chains. It's scraping the best execution method across all these chains, right? And then it's making a decision based on those factors. Obviously, risk comes into play too, and then it's making a decision on where do we deploy these funds. So, like on average, what kind of performance are you seeing on like the rebalancing side? Like, how often are you seeing that these vaults are actually rebalancing themselves? Is it
Right.
multiple times an hour? Is it?
Oh, no, no,
How are
no,
you
no,
seeing
not
it?
at all, not at all. Well, it's actually a bit tricky because it's true that in our beta we had something like 20 strategies integrated, and now in our
Yep.
V1 there's 700 strategies. So, with 20 strategies across 4 vaults, on average, really like 5 strategies per vault. And right now, because right now in the V1 we will not have like 1 vault per asset per chain, but just 1 vault per asset. There's like 350 strategies per vault.
Mhm.
So I don't think it's comparable because now we're going to be moving much more often. Also, before, like the two chains we were on were like mainnet and Polygon, and on mainnet you move way less frequently, obviously for
Right.
because of gas.
Right.
And Polygon does not have a ton of activity in DeFi, nor a ton of liquidity in DeFi. So you move less there than you would move on Base or Arbitrum, right? So I think it's hard to answer with the data that we have from before, but I would dare to say that it's going to be 2 to 3 times per day.
Gotcha. No, that makes sense. Um, so yeah, so I guess let's talk about V1 a little bit, the launch. So like right now, you've got the ETH and the USDC vault. For V1, it sounds like many more strategies are coming. Are you still just focused on ETH and USDC, or are you guys going to be adding Bitcoin? Or are you going to be
Yeah,
adding other assets that you can deposit?
we're going to be adding 2 things. So on one end, we're going to be adding Bitcoin, which again, frankly, there's not a lot in terms of like yield farming strategies, and they're not super high yielding, but still, I think it's worth it to have it. And there's definitely an audience for that. And one that we're adding, which is a bit more complex, but I really like, is kind of like a crypto index with yield. So basically, what it is a vault that, or you deposit your assets, and again, to our vaults, you can, it doesn't matter if you have, for example, our main vault is on Base. You can if you have AVAX on Avalanche, we can zap you in, so it doesn't matter. But this will be basically a vault whose value will be denominated in like a crypto index. So it won't have like a USD value or a ETH value, or like it won't be about doing that. It will be basically a vault where the composition of the strategies below it will always be such that there are assets that in that composition have a very high correlation to a crypto index. We don't know yet which one we'll choose, probably the CCI 30, which is the top 30 tokens. And so basically the effect of investing there is basically same as buying the CCI 30, but not we make up those strategies in different ways so that it's always the combination of the best yielding strategies that at the same time give that correlation. So it will be like owning that index and at the same time having yield on top of it. But right now, if you would own that index and you would generate yield on top of it, you would basically have Bitcoin, and then you would have that Bitcoin on yielding strategies, ETH, and you would have ETH on the best yielding strategies, USD. If you want to maybe add it, I don't know. Well, no, it doesn't make much sense. But all the other assets. But the thing here is that except for ETH, most of those assets in the top 30, there's not many yield opportunities anywhere. So but if you look at every point in time, okay, out of all the assets in all the DeFi strategies available, which are the top yielding ones, and how can I start looking like at the top yielding ones and then go down so that I can maybe make a composition of assets that are maybe not in the top 30, but that when put together, their correlation to the top 30 is extremely high, right? And because they generally correlate very well, right? And so you get the same effect as investing in those top 30 assets, but now maybe your yield is like 30% on top of that. And I think I think that will be an incredible product, because with that 30%, if there's a market crash, you're just it's going to be dampened so much, and when the market goes well, it's like leveraging, right? So I think that's going to be a very interesting product.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, and non-liquidatable loan. Deposit your assets and access your future yield now. Available on Mainnet, Optimism, and Arbitrum. Head to alchemix.fi to get started.
Yeah, no, I would have to venture to say that's the first of its kind that I've seen, in DeFi, right? Especially from the yield perspective. So yeah, no, that's interesting. So you're going to be able to zap into this thing with assets from any chain that you guys are connected to. So, yeah. I mean, well, I won't say every asset. I'm sure you guys are going to curate the list of collateral.
Yeah, exactly. It's not every single asset. But we're using Li-Fi for that, and they support a series of assets and chains, and that's basically what we support as well. But I mean, also, like, I don't know, if you have something extremely weird, then I mean, okay, just go to Matcha and do a swap and then bridge it and whatnot, right? But for normal and some out of their assets, it will be possible to zap into it.
Gotcha. Okay, I was hoping I could zap my fart coin into it, but I mean, I guess you're telling me no. I can't do that.
I don't know. Maybe it's supported. It's a long list, but who knows?
Sorry, no, I lost my train of thought. So yeah, no. Oh, I was going to ask you about the decentralization. So you mentioned decentralization, right? The path to decentralization. So does that mean that maxAPY will eventually have a governance token that comes into play that governs this protocol?
Yeah.
Talk about that future a little bit.
Yeah, no, definitely. We definitely want that. And so we are going to launch our token this year. That's for sure. Initially, when we launch it, there will be some things that are decentralized. The first thing that is very easy, obviously, to decentralize is the treasury of the protocol. That's extremely easy. We don't know how many things we'll be able to put into like the first batch of things that you'll be able to govern with the token. But our idea is that you'll be able to pick, to participate in the vetting of strategies that are implemented new, of assets that are whitelisted, because we see strategies and assets as two things. I can whitelist USDC, but then bet certain strategies, or I could say, okay, this strategy or this vault is, I trust the protocols that are behind it, right? Because I don't know, it's Yearn on Curve. Sorry, Yearn on Curve, right? So I trust both; they're fine, but the asset was blacklisted, so we cannot work with that, right? So that vetting process, we want to decentralize. And then also, the strategists, we want everyone to be able to implement strategies into the protocol, so it doesn't depend on a core development team, and for them to be incentivized, for them also to have to put some value at stake during some time to do that, and then also for the DAO to be supervising and accepting strategies or rejecting them, right? So that's kind of some of the things that we want to do. We want to do it all through delegates, so we don't want people to have to be like, everyone with their tokens having to vote, but you being able to delegate and having kind of like a board. And I'm very much a believer in traditional organizational structures. They have been perfecting for hundreds of years to get to the point they're at, and the people that design them and run them, they're not stupid, right? It's the smartest people in the world have these org structures, and there's slightly different flavors to them, but they're more or less all look the same, right? I think decentralization is more about accountability, right? It's more about the only way the CEO of a big company gets fired from one day to the other is if there's a lot of social pressure and the stock starts to go down, and investors get together and so on. But there's not really direct impact from the shareholders on a normal situation. And I also think that decentralization, what it serves for is that there's no accumulation, right? If you have inflation and that issuance goes to users, then you don't have someone who with deep pockets just accumulating more and more and more because they need to fight against that inflation that is going to the users, right? And I think that makes it so that you don't have shareholders, you have stakeholders, right? But in terms of then how it's executed, how that power is executed, I think traditional governance structures and organizational structures work just perfect, right? And we would like to replicate that, but again, like with more accountability.
Yeah, no, it makes sense. I think I agree with that 100%. I've seen some very weird flavors of DAOs that have popped up. And I think the biggest thing is just you can't. I don't want to see. I don't want to have to wait. A long period of time if there's something that happens in the market and I have to wait for like a vote on chain. That's like my worst nightmare. I don't want my assets like affected by
Yeah.
that, because I have to wait for a DAO to vote on whether we should pull our liquidity from this protocol. So, decentralizing the right things again, like we talked about, I think is
Yeah.
key.
I mean, there are things that need to happen on a day to day, like, hey,
Yeah.
assets need to be pulled out. There needs to be someone with executive power to do that, right? And if that
Right.
person does a poor job, you fire that person. You take
Mhm.
you would make a vote to take the rights of that smart contract account out of the protocol, and you give it to someone else, or you temporarily hold it as the DAO until you give it to someone else. But you cannot be calling a shareholder meeting for every single decision you have
Yeah.
on a day to day, because that it just doesn't work, and it's shown that it doesn't work. I think there's been great experiments in innovating on governance models and corporate structures, which have been great, and it's great to test things and try things out. But decentralization for the sake of decentralization, I think is kind of like a bit of an immature idea, and not a realistic one either.
Right. And you mentioned too, one thing I think you touched on. So the strategists eventually, right, that'll be able to submit strategies. In order to do that, they've got to put some kind of collateral up that can be slashed if they act maliciously. Is that
Or
the
find a
model?
sponsor for that, because there can be people who are extremely smart but don't have any assets, right?
Yeah.
So they either need to put up something themselves or find a sponsor for that.
Gotcha. Interesting. So how are you guys planning on the initial distribution of this token then? Are you guys, I mean, we've seen the points meta kind of playing out, obviously. I think we've had our ebbs and flows to that on like market sentiment. But I mean, are you guys planning on implementing a points program where people can
Yeah,
earn points through the
I
use of the
mean,
protocol? Or?
we are doing so. We're not doing so for the sake of like generating a lot of hype, because I think people don't get as hyped anymore about points as they used to do. It's more about just transparency, in the sense of like people knowing, okay, am I getting anything? How much am I getting? And avoiding like people being. I don't think anyone will be disappointed, because I think we have set out quite a bit of the token supply for users. But there's always someone always will be disappointed, right? And the more transparent you are and the more you set expectations, the less that happens. And also the opposite, right? People, I think right now that people are like more used to points, if there's transparency and that they're actually going to be getting quite a bit of the supply, then it generates also more hype, and then people are also more excited about it, which is what will be the case, I think.
Gotcha. And then in terms of like the underlying strategies, if you guys implement a protocol that is also offering points, I'm assuming so the vault is accumulating those points. Does that get passed on back to the user as well? So they kind of keep their points exposure through maxAPY?
Yeah, it is. One thing though that is a bit unfair in our opinion, but we're still figuring out how to do it, is imagine you deposit some assets January 2025 and you take them out in April, right? And then in November there's an airdrop for everyone who used the protocol in January in 2025, sorry. And now the users of November are benefiting from what you deposited, right? Um, but but I mean, there is a relatively simple way of doing this, which would be kind of like keeping track of everything and then redistributing it back. But it requires some intervention. It can't be done fully on chain, because, for example, if you get an airdrop, the protocol doesn't know what logic it's following. Like, is the airdrop for whoever is using it right now, or is it for everyone who used it in the whole of January, so the whole of 2025? The protocol cannot know that, right? So you need a human to tell it, okay, this belongs to everyone who used it. And then you need to distribute there or make it claimable. It's not as easy as it might sound to do all of this on chain. Like, one of the things you realize when you develop stuff on chain is that many things are not as straightforward to develop as one would think, or many things are not even possible to develop, right? So what we're thinking of, like, do we, spend a lot of time in doing that, or frankly, is it just like, hey, okay, well, you should have stayed, right? I don't know, uh, but I'm more inclined to the former. But yeah, but it is not an easy task.
Yeah, no, absolutely. I can speak with personal experience on this. Working for a protocol that's kind of trying to tackle that same problem. It's a very complex issue, but it's interesting all the same, right? Like, I think, and again too, like I think I saw Pendle do this, where like the protocol had actually accumulated some points from their integrations. Obviously, if you speculate on YT or whatever, you're getting your points, from the
Yeah,
protocol. But the Pendle points, like the Pendle itself, actually accumulated as a DAO. I think they ended up distributing all of those tokens to, VE token holders or VE
yeah.
stakers,
The
which I
thing
thought was
is
interesting.
that Pendle has like a few integrations. We're talking here about like 700 strategies.
700, yeah,
So,
yeah, yeah,
right,
yeah,
so you need to keep, like, every time there's an airdrop on any of those, you need to go to the tokenomics and read, like, okay, how does it actually work? And then sometimes it's not even the tokenomics. You need to look at the smart contract of how it was distributed to really do the attribution properly, because the last thing you want is to
yep,
send it to the wrong people and stuff like it's really not that easy, right? When it's so
yep.
many protocols involved.
No, it makes sense. It really, yeah, it makes sense. Um, So I think it's a good time for us to start wrapping up. Maybe tell us a little bit, I guess in closing, I think we touched on probably a lot of this, but like what's coming up for maxAPY that's maybe the most exciting thing for you? I know you mentioned the index product that you guys are launching, but what else is on the roadmap? What can we expect to see from maxAPY in the next couple of months here?
Yeah. So I don't know if in the next couple of months, but from here until the summer, it will basically be. I mean, the V1 launch is imminent, of course,
Yep.
next few days, and that's extremely exciting to us. The Bitcoin Vault launch will be. We haven't decided; it's ready, but we haven't decided yet. It will be at the same time, or maybe a couple weeks later. Um, the index product will come after that. We will then launch the token, and decentralize, progressively different parts of the protocol. And then after that, we will be, once we've reached significant TVL, we will start to launch the risk tiered vaults. Those are mostly aimed at, we'll try to tie that with some sort of questionnaire that helps, because many people don't know, like, what risk profile am I? Am I like a B plus or a C minus, or I have no idea,
Yep.
right? These are just
Yep.
numbers. And so some sort of questionnaire that helps people navigate them, where they would fit the best. And I think that will also be a great product for protocols, both for their treasury as well as for idle liquidity that they might have on, be it lending pools or be it other sorts of liquidity vaults or pools, right?
Absolutely. Well, really appreciate your time. I know it's precious these days to spend 45
Thank
minutes
you.
yapping with somebody like me, so I appreciate it.
Thank you.
For users or anybody that's listening to this later, check the show notes. We'll have links to all maxAPY's socials, the app, um, and certainly we'll have to have you guys on here down the road once you guys get launched and once things develop. But really, really excited to see V1. And, for anybody listening, we will see you next time on the next episode of Proof of Vision. So thanks.
Thank you so much. Bye bye.
Yep.